Hey, welcome back. It's time for some insurance scandals. Insurance has always been a tricky thing. Done well, you reap amazing benefits, but not handled well, they can turn out to be some of the worst decisions that you take. Many famous people have dabbled in insurance scams and scandals, and you're left wondering, why would they even try weird things? Sometimes it is at the seller end, where the sellers sell an insurance policy from companies that don't exist, and buyers commit crimes for the insurance money. They may commit murders or fake deaths. Number 10. Faking their death. One fakes a death to gain the benefit of the money that an insurance company is in agreement with that person to pay to the nominee after that person expires. John Darwin is one of those who faked his own death for the insurance money. His wife was also involved in this crime. Both of them were charged when the scandal came to light. This scandal is called John Darwin's fake death. It is one of the biggest insurance scandals. John Darwin was born in County Durham in 1950. Darwin married Anne Stevenson in 1973. On the 21st of March 2002, Darwin was reported missing while kayaking at Seaton in Carew. After a thorough search over the vast sea, they concluded that there is no trace of Darwin anywhere. The next day, Darwin's wrecked kayak was found, and Darwin was pronounced dead. The death certificate was issued too. He had an insurance policy with UNAT Direct Insurance Management Limited. $25,000 were paid as insurance to his wife, who was the nominee after him, was paid. After a year, in February 2003, Darwin, who was assumed to be dead, moved back in with his wife. In 2007, police reopened the investigation when Anne's colleague heard a suspicious telephonic conversation between Darwin and Anne. Soon the investigation was successful, and Darwin was found guilty for faking his death. John and Anne Darwin were imprisoned for a period of more than 6 months on the 23rd of July 2008. They were also asked to pay a heavy mortgage of $130. Number 9. Business on fire. Damaging their property is another form of scandal people tend to indulge in order to claim the insurance money. Insurance companies that are supposed to pay for loss and replacement seek legal help when they suspect the claim to be illegal. John Mango is one of them who planned and damaged his property for insurance money. This scandal is called John Mango's Fire. This scandal is from Toronto, one of the happening cities in Canada. A businessman had appointed people to set his own business on fire in order to claim the insurance money. The inhabitant families interested in that locality were forced to empty the place, and in that process, people were killed, and this is how the scandal got exposed. He was severely fined for illegal doing and second-degree murder for killing innocent people. Number 8. Horse murders. Murder is a brutal act for insurance money. People kill people, animals, and other insured living beings in order to gain profit over their death. Some purposefully insure animals to get them killed in exchange for insurance money. The horse murder scandal is one such colossal scandal that occurred in equestrian sports. This scandal involved killing expensive horses and claiming for the insurance that was to be paid after the death of the horses. These horses belonged to show jumpers and were insured purposefully against injury or death. Approximately 50 to 100 horses were killed in this scandal. Later, when the FBI investigated the suspicious deaths of the show jumper horses, this scandal could see the light. Helen Bratch, the whistleblower, was the one who lost her life in this scandal. Number 7. The Titanic. The story of Titanic is quite popular. Most of us know the devastating story of the great ship that sank as a result of miscalculations and inconsistencies. There was a vast mystery that revolved around the sinking of the great unsinkable ship. There is another dimension of the unsinkable ship that is often overlooked while grieving for the loss of the great ship. They came to an abstract conclusion that considers the sinking of the Titanic to be one of the biggest insurance scandals. They believed that the ship had various discordances and inconsistencies that led to the sinking of the unsinkable ship. They suspect the sunken ship to be Olympic. Another ship that was identical to Titanic was swapped with Titanic and sunk due to its inconsistencies. However, both the ships Titanic and the Olympic have short lifespans. The sinking of the great ship remained a mysterious tale involving the conspiracies around it. Number 6. Art theft scam. Stealing an art, also referred to as art napping, is a legal crime. One shall be punished for thievery that is involved in stealing an art, for example, a painting, drawing, or an article. If an object that is insured is damaged or stolen, the insurance company is prone to pay for it. Taking the advantage of this policy, people tend to steal their own property. Stephen G. Cooperman is one of them who committed one such fraud. Stephen G. Cooperman is a medical practitioner who claimed insurance for Picasso's painting that was stolen from his house. He claimed $17.5 million as insurance, which was an overprice. Insurance company has refused his claim, believing that he was overpricing the painting. Later, when the FBI came into the picture, they found out that Cooperman stole his own painting so that he can claim insurance money. He was punished following the legal proceedings. Number 5. Slip and fall accidents. People who are insured can claim for insurance for injuries and accidents. This is a simple concept of insurance policies. Isabel Parker is one of those who committed this fraud not once but several times throughout her lifetime. Isabel Parker was imprisoned at the age of 72 when she was caught in an insurance fraud. She claimed insurance for 49 times, making $500,000 out of slip and fall accidents. She is addressed as the queen of slip and fall accidents. Number 4. Michael Jackson and drug prescription. Michael Jackson, a famous lyricist, dancer, singer from America, Michael Jackson died of a drug overdose. The famous Lloyds of London invalidated a huge insurance scheme that insured his tour This Is It, as they said he lied on his application. His insurance company refused to pay his insurance as Michael Jackson did not mention his drug prescription during the insurance agreement. $17.5 million that had to be paid as insurance in case the tour didn't get off the ground got canceled. They also alleged he had not even been under a doctor's care for anything other than cosmetic procedures since 2005. Jackson's family and fans had a lot of negative opinions about the Lloyds after that incident. Number 3. Manhunt in Chicago. Dr. Gautam Gupta was a physician who prescribes practices for weight loss. He claimed several insurance policies with respect to his mysterious practices that never occurred. He claimed around $25 million in 10 years of span and fled with the money. The FBI led an investigation which resulted in a manhunt in Chicago. Later, he was found as a result of vigorous search over the streets of Chicago. His fines included paying back his profits with interest and cancellation of his practitioner license. Number 2. Car on fire. Destroying their own property is a fraud people resort to in order to claim to gain the benefit of the insurance money. But this is a typical scandal where the perpetrator resorts to the fraud in order to escape paying for the car she bought. This scandal has its similarities with John Mango's case. Tramisha LaShawn Fox, who is tired of paying for her car and has decided to set it ablaze and in turn has claimed insurance for it. When her scam came to light, she was punished with 3 months of imprisonment and denial of employment. Number 1. Deliberate car accidents. This is another brutal fraud under which innocent people's lives are at threat. It is a critical scandal where people might lose their lives. In the 90s, cars were intentionally forced into road accidents to claim the insurance money. This was a successful scam until it was exposed. Every time there was an accident, people earned around $20,000, which was huge money. People on the road, drivers who were not involved in this scam, were injured too. Sometimes these accidents were turned out to be death threats to the public involved unintentionally. This was a major undercurrent insurance scam. So these are the top 10 insurance frauds or insurance scandals that were exposed by investigative bureaus. It is clear that the risking with insurance policies leads to a huge breakdown of the status quo. Hope you liked the video. See you in the next one.